Hey everyone, welcome back to the Capital Mindset Show. Today we're revisiting an old stock. I got actually a lot of content out for you guys here today, so keep an eye out for all of it. If you guys are interested, of course, I put out the videos. You guys decide whether or not you want to watch them, or maybe not watch them. It's all up to you guys. And so taking a look at this company, it is AFRM stock. So AFRM, actually, we'll share my screen with you because it's important that we actually start to bear witness as to what the heck is going on with AFRM. AFRM is actually down 2.72%, and after hours it's up about 2.25%. And we take a look at the longer term picture. We see this massive drawdown, right? And we actually were able to speak on it here on the Capital Mindset Show. And I'll actually pull this up. This is my terrible face. This is my older me when I had more hair. And we'll actually take a look at some of the things I stated, but just to keep an eye out for when it is we stated these things. It's March 18, 2022. The price was around $40-ish. So we actually just take a look there. See, it's $40.54. And the commentary that I think is very important is basically around this 18-minute mark. If I pull up AFRM's stock, let me see right here, the 1 year. I think they were just there. Yeah, 26. So they actually were just there. Just didn't get the video out in time. But they're sitting at 40. So it's not the worst price. Up here it was terrible. But I think we should focus mainly on the risk. And I don't want to be a Debbie Downer, but the risks here are... And I'll pause. I'll just summarize what I said. If you guys want to go check out that video, go check it out. But basically at the time I stated that the price where it was then, and around the $40, was definitely not worth the risk. When we conducted our analysis, we were trying to be very rosy with it, actually, when we were modeling out the future performance. Now, taking a look at what's kind of manifested, well, when you're priced optimally, and believe it or not, it was priced optimally at $40, the risks are just probably too great at the time. And we'll actually, I want to actually first take a look at exactly what were my assumptions, and I'll actually model them out similarly. Okay, so that's fair enough. And so let's actually come back, and we're going to discuss basically what are some of the risks here. And we still are in that quasi-liquidity crunch situation that we've been talking about for quite some time on this channel. If you remember back in the older videos, back in January and December of last year, we did talk about the quantity and the number and the amount in terms of dollars and percentage of margin in the system. So none of this is out of the ordinary. And you guys have asked here and there on the live streams, like what allocation will have to cash. So I'll, leave that for those videos because you guys can, you guys who I've answered that know the answer to that. But regarding everything that's going on, I'm actually very excited. And again, some of these videos coming out today are going to give more information as to some of these stocks. One of them that was on my watch list has actually come down drastically here today. And those of you who are in the Discord community were talking all about it. And I was very excited because I was actually having a meeting with an employee of that company. So it was very exciting. But I'll talk about a little bit more about that, not in too much detail because there are some things I can't really discuss, but I will talk about what I can discuss. All right, so on that note, let's stick to AFRM. So we're going to come here to the model, and we're going to actually type in the ticker symbol, AFRM, and we're going to wait for the model to kind of just wake up and then say, oh, okay, I have demands, and my demands must be met. All right, so we're going to actually use an unprofitable analysis. So we're going to say yes here. We're going to go to a 9%, and very similar to the previous amount, this is what we're going to be basically asking of the model. So we need some level of growth, and remember that we were discounting it at around 10% and having growth rates that were pretty high to give everyone an idea. So I think we had it on the low of 20, and I'll reiterate some of the points I made in that video. One of the main points is stating that whether or not they're going to grow at a continuous rate of 50% is actually very, very, very unlikely. Okay, so because law of large numbers, as you grow and grow and grow, remember the competition is fierce, and in a rising rate environment, in a situation where you might actually see consumer spending decline, these are all headwinds for this business. So you have to keep those risks in mind. The primary concern that any investor should have with any investment is the risk, not the upside. The risk is primary concern because you don't want to be in a situation where you have permanent loss of capital. Now, this stock was actually a very well covered stock by larger YouTube channels. So going off of them, I can't really say what they stated because I haven't watched all their videos on it. But those of you who watch YouTube Finance a lot probably know a decent amount of what the other person said. If you want to share your comments down below, some of the things that they stated, and then you can cross-reference or allow other viewers to cross-reference some of the things stated in this video, or again, kind of shouting myself out in this old video right here. But, it's all up to you guys. It doesn't really matter to me. But taking a look at we don't assume any buybacks here. They're probably going to do some form of dilution. Taking a look at the actual bankruptcy analysis, we probably aren't going to get any bankruptcy out of this company. They're not going to, go kaput anytime soon. Taking a look at the ability for them to do buybacks right now, it's probably not the best time. They probably have to take on some debt in order to do that. Of course, the ROE, ROA, and everything else is negative because they're not making any money right now. This is a business that I'd be very cautious of if I was trying to invest in a market where the consumer might get crunched and stuff. So the risks are all still there from that video, and you can kind of see there that if we actually plug in some of those, didn't mean to do that. We wanted to change this one. So 45% and let's say 30%. By the way, as I stated before, 30% is still pretty optimistic considering all the headwinds, but take a look, even at a 30%, even with a 10%, you're still not there, right? And the probabilities that they achieve a really high margin as the type of business that they are is fairly low. I am being kind of maybe optimistic and saying that 4 years is when they achieve it. And in the previous analysis, I also stated that they might achieve it, for example, in 8 years. And then you can see here, like, for example, if we plug in like 25% there, the model doesn't really like it in terms of an investment. It says we should have put negative 0.28%, translating to don't put any money into it. Now, we can see the price points, and what some of the commentary I was stating was that as a speculation that the consumer does really well, in the 20s, it was just there for that specific price target, that specific estimation. Whether or not it was a speculation I was willing to take part in, definitely not. As you can see, the portfolio is public, by the way. You guys can actually find the portfolio. If you go on Capital Mindset, YouTube channel, and you find any of the videos where I talk about the portfolio, the links are usually in the description. And, no paywall, nothing at all, just completely transparent in that regard. And taking into account whether or not it adds something to speculation, it would be no secret if I did, which I didn't. But that being said, so in practice, I thought the risks were much more intense. And taking a look here today, I don't think that opinion has changed. So that's pretty much my update. I think as far I can see that some people might be making a strong case for this company, but for me personally, it has no place in the portfolio. I'd rather stick to the names that I have been sticking to more recently. I'm really excited about where Netflix is going as far as the price decline. I see the pessimism kind of creeping in, more and more people getting pessimistic, yet the data is telling me to kind of think otherwise. It's still a very small position in the portfolio, but I could see it at a given price that it actually starts to creep up in terms of size as I add to it. Meta, unfortunately, we'll get to that in the Meta video, so keep an eye out for that one. But yeah, that's pretty much the updated video for this company. If you guys enjoyed this video, let me know by smashing that like button, and then comment down below if you guys have any questions, concerns, maybe you disagree with a few points, maybe you're bullish on a firm and I'm missing something, please, share it down below, and then you can allow the rest of the community to kind of see your viewpoints and see where I'm kind of messed up, because definitely I'm not, the arbiter of truth by any stretch of the imagination, and there's going to be many different viewpoints. Also, before we kind of head off here, I actually want to take a look at the sentiment's pretty positive. A lot of mentions actually more recently. This is a very popular retail stock, and actually one of the members within the Discord community actually has done a bit of the work for me, and I'll actually shout them out when I do the video on it. I'll show you their username and everything. They actually created a somewhat of a different how I'm going to design it, but their own version of the YouTube stock index. And then I'm going to create one as well. And so I'm going to have both of them up because they shared it with me. They were kind enough to do that. So it'll be interesting to know. But this one definitely is a YouTube stock, so it'll be definitely on there. So I will actually might just put in for fun some money into the YouTube index, and then we'll see how it performs over time. It might watch it perform amazingly. It could, who knows, but we'll see. On that note, guys, thank you guys so much for watching, and I'll see you guys on the next one. Bye.